Look, there are a lot of great things going on last week. So many. They really didn't get to cover them all in depth. So aside from the cooler than expected inflation readings and the terrific bank earnings, well, let's talk about another huge positive. Last week, we got a very encouraging earnings report from Taiwan Semiconductor Manufacturing Company, a.k.a. Taiwan Semi, or just TSMC for short. The world's leading semiconductor manufacturer reported excellent numbers early last Thursday, which were strong enough to spark a strong rally for basically the entire sector. Yes, this stock is that important. While Taiwan Semi itself was only up 1.5%, by the end of last week, the company's commentary was so positive that the Philadelphia Semiconductor Index finished the week up 5.4%. Even lowly worm Intel managed to become one of the 5 best-performing stocks in the S&P 500 last week, up more than 12%. And many other chip plays had huge gains, especially the semiconductor capital equipment names. Let's talk about those. There's a reason these stocks ran. Taiwan Semi delivered 39% revenue growth year over year, 57% earnings growth. These are extraordinary numbers. Neither of those were big surprises because the company releases monthly revenue results, so we had a very good idea of how much money they were really making. But you know what was a surprise? Taiwan Semi's guidance for the first quarter of 2025. In the first quarter, Taiwan Semi expects revenue of $25 to $25.8 billion, which would represent an increase of 33 to 37% year over year. And based on the company's exchange rate assumptions, they're expecting gross margin profit between 57 and 59%, up from 53% in the first quarter of last year. Now, AI, all these numbers, they were substantially ahead of expectations. That's what you need to know. Management explained that the company's strong results in the fourth quarter were driven, not surprisingly, by the high-performance computing division, which encompasses the AI and smartphone end markets, and made up 53% of their sales in the quarter. Taiwan Semi's leadership in manufacturing AI accelerators, like NVIDIA's best chips, remains the key driver of their success. The best analog is indeed NVIDIA. Taiwan Semi said that after AI accelerator revenue tripled and accounted for about 20% of revenue in 2024, they expect it to double again into 2025. And management thinks the strength in this theme will continue for a while. Over the next 5 years, they expect their revenue to rise at a 20% compound annual growth rate. And AI is the main catalyst for that growth, as Taiwan Semi expects a mid-40% growth rate for AI accelerators during the same period. Now, like I said earlier, the pin action from this Taiwan Semi quarter was extensive, and some of the biggest beneficiaries were the semiconductor capital equipment companies that, well, these are huge makers of equipment that Taiwan Semi buys. Applied Materials rallied 4.5% last Thursday and is now up more than 8% in the 3 trading days since the quarter. Amazing for a supplier. Lam Research gained 4% on Thursday. It's now up 7% over 3 days. KLA rallied 4.2%. Is now up more than 7% since Taiwan Semi's quarter. That is serious pin action. So why did Taiwan Semi quarter spark such a big rally for the semi-equipment, capital equipment sector? Simple. In addition to all of its bullish revenue and margin guidance for the first quarter of 2025 and the positive commentary about its long-term revenue growth potential, Taiwan Semi also disclosed its capital equipment budget for full year 2025. It was enormous. The company expects to spend $38 to $42 billion in capex this year, which would be up between 28 and 41% from last year and was well above the $36.4 billion number that Wall Street was expecting. And by the way, management said that about 70% of its capex budget would be spent on, quote, advanced process technologies, end quote. And again, equipment to make GPUs and other accelerators, basically chips from NVIDIA and their imitators. I was very surprised that NVIDIA didn't go up even more last week. It's catching up now. And just in case you were concerned, I'll add that Taiwan Semi management expects this money to be well spent. They said, quote, a higher level of capital expenditures is always correlated with higher growth opportunities in the following years, end quote. These guys know what they're doing. That robust capital equipment expenditure guide is why the Semiconductor Capital Equipment Group has caught fire over the past few days. Capital spending from the world's largest foundry, and that's a name for a big manufacturing facility, means money spent on the massive big-ticket pieces of equipment supplied by the Applied Materials, Lam Research, KLA, and Dutch ASMLs of the world. The fact that so much of Taiwan Semi's capex budget is going towards advanced process technologies is also a huge positive, because those are the latest and greatest and most expensive pieces of equipment these capital equipment companies sell. Now, but there was more to this move than just the explicit numbers that Taiwan Semi put out. While the semiconductor capital equipment companies have been terrific long-term performers and started out last year hot, do you know they've basically been losers for the past 6 months or so? In fact, these stocks sold off in the second half of last year, so only Applied Materials and KLA actually finished the year in positive territory. And all four significantly underperformed the S&P 500 in 2024. Maybe I haven't missed everything here. Throughout that time, the narrative has shifted from immense opportunity represented by the latest chips like AI accelerators to concerns about why the full opportunity might not be realized, whether that's because of some unsubstantiated rumor about delayed production for NVIDIA chips. We hear that constantly, right? That drove the stock down last week. Or more recently, the export controls that the United States was trying to impose to limit AI development by some of our greatest geopolitical foes, especially China. These companies gave up billions of dollars in business when Biden cracked down on Chinese ordering. Periodically, concerns also emerged whether the hyperscalers are certainly investing tons of money in AI infrastructure now. Maybe the investments aren't sustainable and will need to be pared back in the future, perhaps substantially. And an uneven process in the market for some of the more basic chips hasn't helped the group either. Long story short, I think the breakout in the Semiconductor Capital Equipment Group is a reflection of investors starting to think, once again, about the scale of the opportunity, not about what's dismal, but the opportunity ahead for these companies. Taiwan Semi's management team spelled out that opportunity so eloquently in its earnings report and the associated conference call last week, and investors finally began to realize that some of the restrictions on some of our most advanced semiconductor technologies might soon be coming to an end as the Biden administration's time is over. I'm not sure about that, but that's what people are thinking. Oh, by the way, of course, on a day when Oracle, SoftBank, and OpenAI also announced plans to spend $100 billion on new AI infrastructure, just for starters. I'm also not as concerned about the idea that the hyperscalers might need to slow down their AI spending, partly because I've heard from NVIDIA Jensen Huang over and over about the impressive returns on investment that customers can get from their purchase of his most advanced AI product. Frankly, I don't think the opportunity for these semiconductor capital equipment companies was ever really that diminished, even when their stocks were getting clobbered last year. There was just a perception problem, and it's always hard to move the crowd when a group's out of favor. But with its bullish report last Thursday, Taiwan Semi was able to remind investors how powerful this theme is, remind you how powerful this theme is, essentially resetting the entire narrative for everyone operating in the high-end semiconductor world, including the semiconductor capital equipment companies that stood out as some of the biggest beneficiaries. Bottom line, I want you to keep in mind, as we hear from the rest of the industry, that Taiwan Semi has a tremendous understanding of the business, and they're insanely positive about the future of chips that can power AI. I know the action of the group seems long in the tooth, but in truth, maybe we're still in the early years of a once-in-a-lifetime new industrial revolution, and you need this equipment to stay ahead of the crowd. Mad Money's back at the break.
Coming up, could a decline in interest rates get the housing sector back on track? Cramer's giving you two names to play the move. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.